Okay, so hello everybody. I hope you can hear me okay. So I'm Serena, I'm a GP. Oh, Matt, there's a bit of feedback with the sound, I think. I'm just going to message everyone. So for those of you that are joining us for the first time, there'll be a chat box. Just let me know if you can hear me okay. And if you can see me. Great. Okay, great. Hi. Ian, can you hear me? Raljit, hello. Hi, Para. If you can, yeah, thanks, Rohit. Well, you can see me and hear me. No, there is still a bit of feedback. Can you hear? Sorry, I'm not talking to myself. Right, so Sam, hi. William, hi. Can anyone hear like weird feedback? Or is that just me? See, can you hear that?
I don't know if it's on David's side. David, all sounding okay?
It all sounds fine to me.
Can you not hear an echo?
No.
Oh, okay. Great. Oh, Jamie, try putting your volume up. There is, yes, Anna, I can hear some interference as well. I think Matt's going to try and sort that out now. I'm not sure why there is feedback.
The only other thing we could do is make do or try the other laptop.
Okay, maybe start it up then. I might pop if there's any other problems. Hi, Baltic. Hi, Anne. Okay, great. So where is everyone tuning into while we just wait for everyone to log on? Oh, thanks, Samuel. Maybe the echo's sorted now. So where is everyone? Yes, Anne, I think I'm echoing. That's what I think as well. Is it my microphone? Good question. I don't know. I've not had this problem before. This is a new. I might just like keep a little bit further back so that you can hopefully hear me clearly. So, oh, hold on. It says I need to turn off my sound output. Your mic is recording the output. Rohit, we need a backup tech support person, and I will definitely be messaging.
Make me look bad. I'm not impressed. See how you get on now.
Okay. Oh, that does sound better. Less power, that's what I've done. Oh, okay. Can everyone hear me okay? Yeah, I think that's better. Thank you, Rohit. I owe you one. That's been really helpful.
Rohit, you're barred.
You're making Matt feel a little bit incompetent with his IT skills at the moment. Okay, so thank you everyone for joining us for this webinar. This is a hugely popular topic, and I'm delighted to have David back with us again. I'm going to let David introduce himself shortly. But so just to introduce myself, for those of you that might not have joined us before, I'm Serena. I'm a locum GP based in South West London, and I'm also co-founder with Matt of My Locum Manager, which supports a huge number of GPs up and down the country with their locum work, portfolio work, financial stuff, and we run these regular webinars for all of our members. And the idea behind these webinars is to really help you kind of understand your finances and optimize them. And obviously a lot of these things, that you can record your locum expenses on My Locum Manager and take pictures of your receipts, which is great. But what's really useful is knowing what expenses we should be logging so that we can be as tax efficient as possible. So kind of going on to the next slide. Okay, so making the most of tonight's webinar. So on My Locum Manager, there's a resources section which you can get to by just going to mylocummanager.com/resources, and there's a locum expense checklist on there which lists basically all the major expenses you can claim. I know, David, also you have a list as well, don't you?
Yes.
Which hopefully kind of the two together could give you a really comprehensive thing.
Yes.
And also, the whole idea behind tonight's webinar is to help give you the opportunity to ask questions and get answers to any questions you have about types of expenses you might want to claim. And it's different for everybody. I know when David and I were prepping, I asked him like loads of different questions about things that I would want to claim on, or I'd heard from other GPs that they want to claim on. So just ask. And the sharing is there because, well, I just wanted to first of all say thank you to everyone. We sent an email out last week, I think it was a week ago or 2 weeks ago, just asking our members to, remember to refer their friends and colleagues to My Locum Manager. And I was actually really humbled and amazed by the response. So thank you all. And don't forget, you get a free month for everybody you refer. So Matt, aka IT support, will sort that out for you and do it automatically. So David, the checklist is in the resources section of My Locum Manager. So if you just go to mylocumManager.com/resources, there's lots of different resources, and one of those is Locum Checklist. Hi Manara. And what I'll do is I'll put the link for the checklist in your messages now, so you can download it after the webinar. And if any of you have any trouble, I'll email it out after the webinar as well. Okay, so moving on, I'm going to hand over to David now, and he's going to start with a broad introduction about kind of what type of expenses you can claim and kind of the different categories there are, and then we're going to start going through all the more unusual types that there might be, and then finish with the Q&A to hopefully cover all of your additional questions. Some of you have already emailed in and WhatsApped in your questions, and I've got those on a list, so don't worry about those, but just post them in the chat box and I'll make sure we get through them. So without further ado, I'm going to hand you over to the lovely David Elliott, who's going to take over now. And so David, are you ready?
I am ready, yes.
Great. Can everyone hear David?
Yes, you can hear me.
Able to hear you. Any problems, just put it in the chat box. I'll keep an eye. And the other David who's asking questions. So this webinar is going to be about 25 minutes of the key topics and then about 15-20 minutes of the Q&A, and hopefully cover everything you guys will need. Okay, so without further ado, I'm going to hand over to David.
Hello, everybody. For those of you who have seen me before, hello again. Anybody seen me for the first time? So I am the one and only David Elliott of BW Medical Accountants, based up in Newcastle upon Tyne. We're recognised as one of the leading specialist accountants dealing with the medical profession, specialising in all accountancy, taxation and NHS pension matters. So I'm here this evening to talk about it's one of my favourite topics, and it's very, very pertinent, and that's the expenses which can be claimed as a GP. Now, as a GP locum, there are three main areas of expenditure. Firstly, we'll cover professional subscriptions. Now, these are a given. Now, it covers things like your GMC registration, RCGP, BMA, if you remember, and medical indemnity insurance. And all such subscriptions and expenses are 100% allowable for tax purposes. Now, depending upon your circumstances, if you are a salaried GP, the legislation surrounding claiming tax relief on subscriptions is stringent, and HMRC publish a list of all of the recognised bodies that they will allow tax relief on subscriptions to. Now, as a self-employed individual, so if you have self-employed locum GP income, then that earnings stream opens up a whole new spectrum of expenses that can be claimed. So professional subscriptions, you aren't just restricted to the list which the revenue publish. You can also have tax relief on other subscriptions if you subscribe to, say, the National Association of Sessional GPs, or we have a North East Locum group, or your subscription to, very importantly, My Locum Manager. Those sort of subscriptions will all be allowable for tax purposes against your self-employed earnings. Now, if you are in the circumstance where you have a salaried appointment and you have your self-employed earnings running concurrently, then again, you will enjoy that full spectrum of tax relief which can be claimed on all of these subscriptions. Don't be concerned if you have pay-as-you-earn relief through your code number against a salaried appointment during the year, when you come to complete an annual tax return, that just does not mean you have to claim those expenses against your salaried earnings. You can enter a claim for all professional subscriptions against self-employed earnings. And in fact, it is good housekeeping to do so, because if you have self-employed earnings above the Class 4 NIC threshold, in round terms, about £8,500 per annum, if your net profit in a self-employed capacity on your locum earnings or out of hours or whatever is above that threshold, you don't only get income tax relief, but you'll also get national insurance relief. So it is good housekeeping to claim all your subscriptions against your self-employed earnings.
David, can I just ask a question here? Because this is something that a lot of people actually sent in a question about. So if you're a salaried GP and you're also doing, say you're doing on average 2 or 3 locum sessions additionally a week, are you saying that they could claim for, is it a proportion of their salaried, of their MDU or MPS or whatever it is, plus the other professional subscriptions? Or so do they say, oh, I'm doing kind of 60% salaried work and 40% locum work, so I can only claim 40% of my indemnity, of my BMA, my GP?
No, it doesn't work that way. All professional subscriptions, be it medical indemnity insurance, GMC, RCGP, BMA, immaterial of whether it's on that approved list, if you have self-employed earnings, 100% of all such expenses, professional subscriptions and indemnity, are all 100% allowable for tax purposes. Okay, brilliant. Thank you. So the next area of expenses will be course fees and training. Now, HMRC appreciate that it is a requirement of the medical profession that you have to undergo continued professional development. So the annual course fees, GP hot topics, those sort of conferences and courses are all 100% allowable for tax purposes. Again, as a salaried GP, it's a little more strict. Now, HMRC take the view that if you are required to undergo such continued professional development, it must be incurred wholly, exclusively, and necessarily for the performance of the duties of your salaried appointment. And in that context, then your employer should pay for the training costs. If you have self-employed earnings running concurrently, again, it opens up a more relaxed spectrum for claiming expenses through the self-assessment tax return, and you can claim all such course fees and training expenses which have not been reimbursed to you by any employer. Now, as a locum GP, you can also claim associated travel costs to conferences and courses. It needs to be a reasonable cost. So for argument's sake, if you were to have to take a train, the tube, a taxi, or the associated mileage in your own motor car traveling to and from conferences and courses, those will also be allowable for tax purposes against self-employed earnings. At this junction, I'd also like to touch upon exam fees, because for those of you who have had to endure the Royal College of Practitioners, the Advanced Knowledge Test and the CSA exam fees, those are now deemed to be 100% allowable for tax purposes. HMRC have only relatively recently adopted this change in their legislation. So you need to be careful when you approach HMRC for tax relief on such claims for expenses, for exam fees, sorry. Now, the reason I say that is because if these expenses for your AKT and CSA exam fees, coupled with all of your other course fees and training, together with your professional subscriptions, medical indemnity, in any given tax year, all of those expenses together, if they exceed £2,500, then you won't be able to obtain tax relief via the more direct route with HMRC, the simpler route through either online, over the telephone, or just simply in writing. You will need to go down the route of submitting a full-blown self-assessment tax return. Now, that in a sense can be a positive step, because if you approach HMRC with a list of all your expenses and you get a positive response, and HMRC suggests that the next step would be to complete a full-blown self-assessment tax return, it means we would be halfway there in obtaining or convincing HMRC that the expenses that we are attempting to claim are going to be allowed for tax purposes. So if you do have any expenses in any tax year which exceed that magic threshold of £2,500, the tax relief associated, they're quite chunky figures, so it is imperative that you get a specialist to perform that exercise for you. And certainly when you open up the avenue of completing self-assessment tax returns, I would recommend that you always have a specialist do that for you.
David, can I just ask you, if we just go back one, because there are a couple of points here that I was messaged about. So, you know where you've put traveling to and from training courses and conferences, what about if, so say we all as GPs, we have to do, Manoara, that's the exact thing that I was going to ask about. Can we claim tax relief against subsistence related to locum work, food or hotel stay? So that's her questions about locum work. Mine is actually going to be, so I have to go, as most locum GPs have to do, I've got to go on to training courses, like every few months I'll do some, kind of update stuff. Like go on a regular update course and do lots of training. But what about, so I take the photos of the train fare, the cab fare and all the rest of it, and I store it on MLM. But what about coffees and food and stuff on the way to the course and on the way back? Can we claim those things as well related to a course?
Now, we need to be careful because the expenses that we're suggesting are being claimed need to be 100% wholly, exclusively and necessary for the performance of the duties of your profession. Now, it isn't...
David, as GPs, we are dependent on cups of tea. We just cannot function. Can't go and sit in like a 12-hour course without any caffeine. Come on.
So you need to apply a little bit of common sense to the expenses that are being claimed, because you need to be claiming the business element of such expenditure. Now, travel on the train down to London to attend a conference and a course, and it's your decision to stay overnight in a fancy hotel and take the wife out for a slab of meal. That is not going to be allowable for tax purposes. It's not associated to the conference or the training. It is incurred in the performance of the profession. So you need to be careful. And again, it can be argued, well, the revenue would challenge if you're trying to claim your Subway or your Costa coffee as 100% allowable for business purposes. You need to ask yourself the question, is it a business expense? Is it necessary that you have to have a Costa coffee as part of the conference or the course or the training? And the answer would always be no. So you need to apply common sense in this context.
Yeah, no, that makes sense. And Manoara is asking, can we claim tax relief against subsistence related to locum work, so food or hotel stay? So, for example, some of us sometimes think, oh yeah, we'll just, travel up, a couple of hours away, we're offered like say a longer stint somewhere, so you might go and stay there for a few days. Can you claim subsistence then?
Yeah, again, you have to be careful because the locum engagement concerned, is it 100% allowable for business? The fact that it's out of the area, it's your choice to travel out of the area. Now, if you need to stay again in a fancy hotel, then we can look potentially. There are some HMRC prescribed subsistence claims, but they are minimal and they wouldn't stretch to staying in hotels. It's different if you travel to, say, a conference and it's a 2-day conference and it's a requirement that you stay in the hotel. And you tend to find with such expenditure, it's an all-in claim. It's an associated claim because it's all one fee for attending that 2-day conference, perhaps.
Oh, okay. So I guess is the answer no then? So
the answer is you need to be careful. We need to look at that on a case-by-case basis. But HMRC would be quite stringent on that. And if was living in London and they decide to travel to Paris for a conference, then the revenue would question that. If the same conference was available in the same town or the next town, why is it 100% allowable for business purposes to travel to Paris or to or to Rome or whatever? That's what the revenue would challenge, and that's where common sense needs to prevail.
So that's for courses. What about for locum work? So if you're traveling for locum work?
Now, again, for locum work, there are some HMRC prescribed rates for claiming subsistence, but they are minimal. And again, it's a case-by-case basis. And you need to ask yourself the question, the claims that we're putting on a tax return, they need to be 100% allowable for business purposes and relate 100% to the business to the locum engagement. And it isn't a requirement that effectively you have to have a slap-up evening meal or stay at a fancy hotel. So it needs to be, we need to apply common sense. It needs to be looked at on a case-by-case basis. And you need to be careful if anybody was attempting to claim such expenses because it can be challenged by HMRC.
So I guess the most sensible thing is just keep a log of all your claims if you're locuming like in another city and traveling back and forth. Hand them to your accountant and then let them maximise, but do keep a record of everything.
Absolutely.
And which is what I do. So I do actually, my accountant does get Costa Coffee receipts and things like that. And then he'll say to me, yes, no, Serena. So he'll just try to work it out. And then very quickly, so NK, yes, we're going to cover that question. And Rohit's asking about what's the window for, you can claim retrospectively, can't you, for exams? What's the time window again? Could you remind us, David?
Yes. So HMRC legislation would allow us to reopen the previous 4 years' tax calculations. Now, where we sit today in October 2019, that would cover, the previous 4 years would cover the tax year ended 5th of April 19, 5th of April 18, 5th of April 17, and 5th of April 16. That earliest year, 5th of April, the tax year ended 5th of April 16, starts on the 6th of April 15. So it's that window from the 6th of April 15 to the 5th of April 2019. Any expenses, if it's exam fees, if it's professional subscriptions, your GMC registration, RCGP and so forth, medical indemnity, if you have not had all of the tax relief to which you are entitled to within that 4-year window, then it's perfectly fine to revisit that respectively. HMRC would not frown upon that, or they would not ask questions, or they wouldn't deem it sinister as to why you didn't obtain tax relief or claim tax relief initially. It's perfectly fine to do it retrospectively.
So I guess that's one point of action for all of you attending the webinar today. So if you can go back the last kind of 5, is it 4 years, did you say, or 5?
4 tax years, the previous 4 tax years.
And list all those GMC, RCGP, all those claims, and make sure if you haven't claimed them, then pass them on to your accountant to make sure for this subsequent tax year you do claim and get that money back. Okay, great. Sorry, David, carry on with your...
On that point, when you do submit a retrospective claim to HMRC, HMRC would not request copies of all such receipts. So they don't need to see your receipt for your GMC registration. They understand it's a requirement that you need to be registered with GMC. So all such expenses claims can be submitted to HMRC on the basis that you could substantiate those expenses if HMRC did request sight of documentary evidence. But it isn't a requirement that you submit that documentary evidence up front. You just need to be sure that any claim that you make can be substantiated by way of either a physical receipt or bank statement documentary evidence, credit card documentary evidence. As long as it can be substantiated in that sense, then HMRC would be happy. You don't need to submit the actual receipts up front. Okay. Now, Serena and I talked about, when we did the run through, what sort of course fees can be claimed in the medical profession. Now, as I alluded to before, HMRC appreciate that the medical profession, there is a requirement that you do need to undergo continued professional development. Now, the HMRC legislation, which covers course fees and training, is quite stringent if you are in a salaried post as a salaried GP. Now, the revenue legislation will stipulate that any such continued professional development is fine, but anything that relates to a new skill would be disallowable for tax purposes. Now, you have to bear in mind that that legislation is written for the population in general. It isn't just applying to the medical profession, but when you do apply that to the medical profession, then this is my argument. In the medical profession, all you guys undertake all of your fundamental training when you when you first join the training program. You cover the fundamental basis of everything to do with healthcare. Then once you get to this point in your career, if you then decide to say undertake a dermatology course, for argument's sake, if you're in the consulting room and it's the summer's passed and you're seeing a lot of moles presented to you or skin conditions presented to you by your patients, and you feel it would be helpful if you could then perhaps sit a dermatology course, just so you've got a bit more understanding and you want to make sure that moles that you're cutting off or moles that you're suggesting are fine. You need to know that you are up to date. So in that context, that dermatology course is not a new skill. It is an enhancement of an existing skill because you cover dermatology as part of your GP training. So in that context, my argument is that as it is an enhancement of a fundamental underlying skill, then you can claim tax relief on that particular course.
So David, as you said, you and I had spoken in quite a lot of detail about this, and for those of you that have joined us on the webinar, David and I were talking about, so as a GP, obviously kind of you and, you know, we all will go on our update courses and we might do a prescribing course and just the generic kind of things every year to keep up to date. But actually now there's so many other courses coming in which enhance our GP training, and also, to be quite frank with you, also probably enhance our interest in the job a bit more. So I've met GPs that have done kind of sports medicines diplomas, or have gone on to do different types of masters, or done minor surgery, or diplomas in dermatology to become a gypsy. And so David, so the question that I was asking, just to put it in context for the audience, was, say we want to do an acupuncture course, or we want to do a non-medical course, which could be loosely related to general practice, like, for example, courses around resilience or well-being. Can we claim for those? Because they are linked to our practice.
Absolutely.
Yeah.
Now,
okay.
What I would suggest you would need to bear in mind is that with a self-assessment tax return, the clue is in the title. Effectively, you self-assess. So you then are in a position where if you have an expense, such as, say, a sports science diploma. Now, the revenue legislation stipulates that anything that leads to a new qualification is disallowable for tax purposes. However, in the medical profession, as I say, I believe that the argument is that any area associated with medicine is an enhancement to a degree of an existing skill. Now, in that context, there is no obstacle in claiming a percentage of such and continued professional development, or a new. So if you do branch off and become a GP with a special interest, if it does lead to a new qualification, don't think that that will be 100% disallowable. There is a view to be taken here. And again, I would suggest that you speak to a specialist medical accountant on a case-by-case basis, because we are talking chunky figures, and these sums aren't small. The tax relief associated with the expenditure relating to such enhancements of your underlying knowledge can be expensive. So tax relief is important. So speak to your specialist medical accountant on that. But my view is that it is positive, and we can claim the majority of such expenditure. If it does lead, if it's a master's, a postgrad master's, it does lead to a new qualification. There is an element which needs to be disallowed, but it does not mean that it is 100% disallowed. There can be an element that you can claim. So you need to speak to your...
Yeah, so I guess, I mean, some of these courses will cost 500 to a few £1,000, like doing an MBA or kind of, and I know lifestyle medicine is kind of quite a new but emerging area. Acupuncture, all those things. So people might have their own interests. So you're saying that actually, best case scenario, you claim 100%. Worst case scenario, you claim a percentage of it. So
absolutely.
So again, like make a list if you're interested in doing. So I've done. I did an acupuncture course quite a few years ago, actually. What about Botox courses or aesthetics? Because I know that's something that's popular amongst certain GPs. Can they claim for that because it's kind of dermatology related? Although they'd probably
absolutely. Now you tend to find if somebody is branching off into aesthetics or Botox, it is going to lead to an element of a new income stream. So in that context, there's no obstacle in claiming the tax relief when it does lead, when it is an enhancement of underlying skills, and it is going to lead to a new income stream. So yes, in my opinion, I would be open to such a claim for tax relief on that expenditure.
Okay. And the other thing, David, you and I discussed, but again, for our members, I'll kind of put it into context. So we were talking about resilience and how actually there is you can claim for certain things to do with resilience related to your work. So I said, what if you subscribe to like a mindfulness or meditation app, and that helps you to relax from all the stress that you have, seeing your patients? Would that be, if it's kind of for professional resilience, could you claim a proportion of that?
I would suggest a proportion. It would not be 100% allowable for tax purposes, because any such expenditure of that nature is going to carry a personal element. Now, what we're trying to establish here is the business element of claims. Now, to be sensible, you need to decide if that is 100% wholly, exclusively and necessary in the performance of the duties of your profession. On heart, you could never say it's 100% required. A gym membership, I understand there is an element where GPs need to have a basic level of fitness, but a gym membership would be ruled out by HMRC, so you need to be careful. But there is no, it is a broader spectrum of self-assessment, and I would be open to some percentage of such claims for things like mindfulness apps, or perhaps expenditure concerning resilience, but it wouldn't be 100% allowable. But if you can identify a business proportion, then I believe that there would be some scope to claim a percentage for tax relief purposes.
Okay. Speaking of mindfulness app, it just reminded me that we've actually negotiated a really good discount off an app called Headspace, which some of you may be familiar with, for our members. So I'll circulate. Basically, what we're saying is, okay, if you refer someone in the next week or something, we're going to give you that discount along with the other benefits. But that's just reminded me of that. Okay, glasses and contact lenses, David. We spoke about this, and I was so happy to hear that. Okay, the story behind this is I was moaning at David that I had to go and get these glasses. I had to get new ones because I think something was, my optician was like, oh, you're wearing your lenses too much when you're looking at the screen. You need to kind of get another pair of glasses and reduce your lens time. And I was saying to David, like, oh my God, it cost like a few £100s to get these lenses, because they were really thick, and they were like, you need to have them thin because they're going to pop out of the frames. And anyway, all this nonsense. And then David said, did you know? Well, you tell them, David. What did you say to me?
Yeah, so in my opinion, that expenditure, whilst it does carry a personal element, there is a professional element attached to having specialist glasses or perhaps contact lenses. Now, but again, you need to be sensible, and no matter which profession it is or trade, there is always an element through the day where people gaze out of the window. That will be a personal use of glasses. But there is also a business element attached to such glasses. But the HMRC would want to see a taxpayer showing willing in disallowing a percentage of the claim. But yes, in my opinion, if you require specialist classes for studying things like people's ugly moles or skin conditions, then yes, I would be open to a claim to tax relief on a percentage of such expenditure. And as long as you show willing and disallow a personal element, then there is no reason why HMRC should challenge it.
There you go, guys. Start playing them. Okay, great. Thank you. I'll let you carry on.
Yep. So we touched on this a few moments ago about how long do I have to claim? So we can go back the previous 4 tax years. That's a rolling 4 tax years. So if you missed the boat, then that earliest tax year would simply drop off, but then the latest tax year would come in to that 4-year cycle. And as I'd mentioned before, what evidence do you need to keep? Now, HMRC would not request documentary evidence up front if you are submitting a claim, but please bear in mind that you do need to substantiate a claim if you are prompted for documentary evidence of any claim that you make upon a tax return. So if you're logging all such expenditure through your My Locum Manager app, again, it can all be substantiated through bank statements, through credit card statements, online banking and so forth. But the bank statements, the documentary evidence in the guise of receipts that you're keeping at your end and your My Locum Manager app would be perfectly sufficient, but it needs to stay in your study. You don't need to post it all to HMRC. And that last point, should I use an accountant or should I attempt the claim myself? Now, as a general rule of thumb, if you're claiming your GMC registration and your perhaps BMA if you're a member, RCGP, and its professional subscriptions, and the expenditure falls below that magic threshold of £2,500, and perhaps if you're doing 2 or 3 years or 3 or 4 years in one go, you can approach HMRC yourselves. You can ring HMRC. There's a telephone helpline. There is an online web page with HMRC on the gov.uk website where you can attempt it yourself. However, what I would suggest is that if any of the tax years you suspect that all of the associated expenditure, if you do have some exam fees, the AKT or the CSA exam fees, or any course fees and training that you are unsure about that may take you above that threshold, it is always best to contact the specialists to get the tax relief claim entered with HMRC for you. Because when you do go above that 2,500 magic threshold, the figures can be chunky and there's a lot of tax relief at stake. So it is good housekeeping to leave it to the specialists. And whenever you're approaching HMRC, there are specific phrases you need to use and buzzwords and particular words and phrases you need to avoid as well. So it's always best to contact the specialists and let us do it for you. Okay. The third area of expenditure, or main area of expenditure, relates to motor expenses. Now, as a salaried GP, the mileage associated with being a GP is very restricted. It's basically attending to patients' care, which basically just would involve home visits or visiting patients at care centres and emergency centres. If you are a salaried GP and you're engaged at a multi-site practice and it is a requirement of your employment that you are temporarily seconded to the other site, perhaps to cover a maternity leave, then that journey between the two sites would be deemed to be a business journey. But you are very restricted as a salaried GP. The good news is if you have self-employed earnings in any guise as a self-employed locum GP or doing out of hours, then it opens up a whole new spectrum of claiming motor expenses. And for that income stream, you are deemed to trade from home. So the good news is whenever you cross your threshold at home and travel to the surgeries where you're performing the locum engagements or the out of hours, then that is a business journey there and back. Now, whenever you're claiming motor expenses, and I can't stress this enough, it all hinges upon your ability to keep a mileage log. And in my experience and in my opinion, the simplest way to keep a mileage log is through My Locum Manager. It's a perfect platform to record all of your business mileage, and the associated claim for motor expenses, again, it can be a chunky claim. The figures, they're not small figures we're talking, and it is 100% dependent upon the quality of your mileage log that you keep. Also, at the bottom of that slide there, it mentions traveling to and from course fees, seminars and training. If you visit your accountant, so if anybody wants to pop up to the northeast to witness my sparkling personality firsthand, then that would be an allowable expense for tax purposes, traveling to see your accountant or your solicitor or your insurance provider. But yes, I can't stress this enough. The quality of your mileage log is of paramount importance, and the best way to have to obtain the best mileage log around is to use My Locum Manager platform.
Yeah, I mean, that's true. It pretty much takes a lot of headache out of it for me and everybody that use it, because it just records it automatically.
Yep.
Dave, please asked a question. Just in terms of the Q&A, because everyone's asking, I've got these questions, so I'm noting down every single question that's coming through, and we're going to do a live Q&A at the end. There's just a couple of questions I'm picking out because they're relevant to specific things in the presentation, but all the questions will get answered shortly, just as soon as we're through the end. So, David, one question I wanted to ask is from Preeti, and it relates to that bottom part of this slide. And Preeti's saying that, can we claim travel costs? So, for example, underground or bus fare to locum sessions if they're regular long-term locum sessions?
Yes. Now it's immaterial. The length of the locum engagement. Any travelling expenditure to and from the locum engagement, if you're not using a motor car, if you're using the tube, if you're using the bus, if you're using the train, they're all 100% allowable for travelling from home to those surgeries where you are performing those locum engagements there and back. So yes, that is allowable for tax purposes.
What about an Uber? You got a cab.
Yeah. So now, if your vehicle is off the road and you need to rely on a taxi to take you to and from the surgeries where you're performing those locum engagements, obviously in this context for that engagement there wouldn't be a requirement to undertake home visits. But then again, yes, if you need the Uber to perform the home visits element of that engagement as well, that is 100% allowable for tax purposes. It's a legitimate business expense because it is a business journey.
Okay, great. Okay, thank you. Thanks, David. And yeah, everyone, just keep posting your questions. Oh, I'm saying, is that even for long-term locum work? Sorry for my feedback being crazy again. Yeah,
so long-term locum work. Now, there has been a bit of excitement about long-term locum work, and it tends to be more from the angle of the PCSE, because if you are a locum and you're submitting locum forms A and B, and the magic time frame was 6 months. So if you have a locum that is a long-term locum deemed to be 6 months or more, then there was a fear that PCSE, if they're seeing locum forms A and B performed at the same surgery, solely at the same surgery for a 6-month period, then the PCSE can then determine that you will be a type 2 practitioner. That is a bit more relaxed from HMRC's perspective. It is more from a pension perspective. But my understanding is that PCSE, again, they're relaxing that stance as well. Now, one way around that is if you have a long-term locum, but you are then also performing sporadic locums at other venues, and you're performing out of hours, then that proves your self-employed status. HMRC wouldn't challenge it. And as I say, PCSE seem to be more relaxed now about that. So if you are pensioning the earnings and you do have a long-term locum and you are concerned, then it may be good housekeeping or common sense to perhaps take a 2-week break, if you can agree that with the practice. But from my perspective and from HMRC's perspective, it is more relaxed. It's more from PCSE, from NHS England's perspective, that they would deem you a Type 2 salaried practitioner. But if anybody has any questions on that particular topic of being of your having your self-employed status challenged by anybody, that is quite a complex area, and we do have in-house specialism on that, and I'll be delighted to talk to anybody if we're experiencing that issue.
Great, thank you.
Okay.
Thanks.
Now, on the subject of from the mileage log, so you've established your Rolls-Royce perfect mileage log using My Locum Manager. Now, that mileage log will then form the basis, it's the foundation of your motor expenses claim. Now, there are two methods of claiming motor expenses. The first, more simplistic method is adopting the HMRC fixed profit car scheme rate of 45 pence per business mile. Now, that works out at quite a generous mileage rate, and that will be applied to your complete and total number of miles compiled using your My Locum Manager business mileage log, and that would form the basis of your mileage claim, of your motor expenses claim. The other more in-depth and complex method of measuring the claim for motor expenses is to look at the business percentage of the running cost of the vehicle concerned. So that would entail all the running costs, such as road tax, insurance, repairs and servicing, fuel, if you have roadside breakdown cover, if you buy a car on HP, all of that, all those associated running costs of the vehicle, we can apply a business percentage and potentially claim that percentage of the running costs of your car. Again, it all depends upon the quality of your mileage log, because to arrive at that business percentage, what we need to do is take your business mileage and compare that to your overall annual mileage, and that will give us the specific business percentage of the use of the vehicle in question, and it's that business percentage which we apply against all those running costs of the vehicle concerned. Now, the HMRC legislation will allow us to compare both methods. So we can use firstly, the simplistic method of taking your beautiful mileage log compiled by My Locum Manager. Those business mileage applied to 45 pence a business mile gives us a business claim for motor expenses. We can compare that to the running costs of the overall car concerned, and whichever claim produces the highest and most beneficial claim, that is the route we can go down. And once we adopt a method, either the mileage claim or the more in-depth actual running costs of the vehicle concerned, you must stick with that method of motor expenses for the lifetime of the vehicle concerned. Now, this particular slide has two quite fancy cars at probably opposite ends of the spectrum. I think the car that you're looking at on the right-hand side is a Bentley, I believe. So what that is suggesting is that there is no restriction as far as the HMRC are concerned is to the quality of your car. You can have a car displayed on the left-hand side, which I think is alluding to perhaps an older car. Again, it's immaterial from HMRC's perspective. It's your prerogative. If you want to go out and you want to buy or spend your life savings on a high-end vehicle, then HMRC won't restrict that, because you can prove by way of your mileage log that you are undertaking business mileage in that vehicle. So it's academic as to whether it is a cheap, old, clapped-out banger, or whether it is a high-end Bentley or Rolls-Royce or Porsche. There is no restrictions as to what type of vehicle you are using. Now, associated with that in-depth claim is also a capital allowance that you can claim on the value of the car as well. So that capital allowance all depends upon the CO2 emissions of the vehicle in question. Now, the higher the CO2 emissions of the car concerned, then the lower the annual percentage that you can claim. But this is something that your accountant can perform for you, and it is an exercise which is incorporated into that more in-depth exercise of measuring the business percentage of the running cost of a vehicle concern that I mentioned before. So that's the road tax, the insurance, repairs and servicing, fuel, roadside assistance, HP, and the business percentage of this capital allowance on the car. It's that claim that we measure against the business mileage, 45 pence a business mile claim, to determine which method we're going to use. And as I mentioned before, the HMRC legislation allows us to compare both methods, adopt the most beneficial for your specific circumstances, and that is the method that you stick with for the lifetime of the car.
So David, can I just ask you to clarify a couple of things? If we go back one slide, so if you purchase and I know we've had a couple of questions about this as well. So say you go from having your old car and you buy a new car and you buy it on hire purchase, is that also tax deductible? Can you claim a proportion of that because you have to buy, or not have to buy, but you bought a newer car?
Yes. So it all depends upon the method where we are adopting. So if the 45 pence per business mile method is more beneficial for a particular individual circumstances, it is immaterial as to whether you start the tax year in one car, change the car during the year, and finish the tax year with a new vehicle. What I would suggest is that both methods need to be compared in any given year, and certainly when you change vehicles, because once you adopt a method, you need to stick with that method of claim, whether it's the mileage claim or whether it is the more in-depth running cost of the car mileage claim. You need to measure that claim periodically to ensure that you have made the right choice. But whenever you do change your car, that is the point where you do need to perform the exercise where you measure both variances of the claim. If you do change your car during the year, or if in your particular circumstances, if it is more beneficial to use the more in-depth claim, whereby you look at the specific business percentage of the running costs of the car, including that annual capital allowance, then if you do change your car, provided that you adopt the tax year as your accounting period, or whenever you adopt, whichever period you adopt for your accounting period, if you change your vehicle within your accounting period, even if it's one day before the end, you will get full tax relief if you are claiming capital allowances on the vehicle in the tax year concerned.
So if you do the capital allowance method, you can actually claim the cost of buying a new car.
Yes. So now just move forward to this slide. It all depends upon the CO2 emissions of the car in question. So we'll see there that it mentions that if your car has a CO2 emissions figure of 110 grams per kilometre or less, you can claim up to 18% of the list price or the price of the car, the value of the car when you purchase it per annum. But then you need to then restrict that claim to the business percentage as well. So for argument's sake, to make the maths easy, if you buy a new car for £10,000 or a second-hand car, and it costs you £10,000 and it qualifies for an 18% capital allowance claim, that's £1,800. And if your business usage is 50%, then we knock off 900 quid as the personal element, and we can claim £900 as the business element of the capital allowances claim, as well as 50% of all the running costs of that vehicle concerned.
Okay. David's making me laugh. David's put, can I claim against the cost of buying my Bentley?
Yeah, so David, if you have been if you have taken the stance whereby you thought it was a good business to buy a Bentley, then yes, if you have a Bentley and you're using that for
David, how many locums are you doing, David, to be buying a Bentley?
Yeah. So if you have a Bentley and you're using that for business purposes, if you're traveling to and from the surgeries where you're performing your locum engagements and you're compiling your mileage log, yes, then you can claim the business percentage of the running costs of the car. And I suspect in that instance, your running costs are going to be quite high if you have a Bentley, even if it's only, say, 10% business use. The mileage
we should all go for it.
will probably make that more beneficial to claim the depth method as opposed to the mileage claim.
So, David, one other very quick thing, because I'm conscious you want to probably get through the last parts of the slide. So, what about MOT, car cleaning, get a flat tire, insurance costs,
Absolutely.
or if you have an insurance claim and you have to pay the excess, can we claim for those things?
Absolutely. So it's the total running cost of the car concerned in the tax year concerned if you are adopting that more in-depth method. So it is MOTs, repairs, servicing, car cleaning, if you have a flat tire, if you do have a prang and there's an insurance cost to you, then again, we can look at but it's all restricted to the business element. So it's all driven by the quality of your mileage log in the first instance. So everybody out there in the audience, your role in this is keep your mileage log and then keep a record of all the running costs of your car, and then you leave it to the specialist to determine, establish what is the more method of your expenses. But as I say,
I put those in because I will on MLM just log. So I save it as a web app, which means you just go open it up on your phone and you save Internet Explorer to your home screen, and then it works completely like an app, but it just means I open up the expenses section, I take pictures, and so every time I get the car cleaned, I did have a flat tire, and I took a picture of the receipt and the labour costs, etc. for that, and I claimed, I think my accountant advised 50%, I think it was, because I'm using it kind of 50-50 between the school run and locum shift. So that's good. So I guess, as you said, just keep a record of everything you're spending, and that's very easy to do. And then make sure you just give that to your accountant. So
you give it to your accountant. That's what we do for our clients. We perform this exercise for all our clients. We measure both methods, establish the most beneficial, and ensure that that's the claim that we adopt through the annual tax return. And bear in mind that motor expenses are it's chunky expenses. It's not cheap to run a motor car. And if you are using it in a business for business purposes, then these motor claims can stack up, and they do have a big bearing on your tax bill at the end of the year. So it is important that that you do record the running costs of the car through your My Locum Manager app. But as I say, I can't stress enough, it all hinges upon the quality of the mileage log. Mileage log drives everything.
Great. Sorry, I won't interrupt.
Yes, the mileage log drives everything, if you excuse the pun. So the quality of the mileage log is of paramount importance. Okay. So moving on from the three main areas of expenditure, which is the professional subscriptions, the course fees and training, and the motor expenses, there are other underlying secondary areas of expenditure that we always want you to consider and to look at. Now, the first point I'd like to mention is capital items that have a business use. So if you are required to go out and buy a new medical bag, a stethoscope, peak flow meter, anything of that ilk, all such expenditure is 100% allowable for tax purposes. So you record those expenses through your My Locum Manager app as well. If you have any computer equipment or office equipment, which we're going to come to next on the next slide, then that again, you need to record that expenditure, because what we want you to consider and bear in mind is that if you're using any such equipment for your professional activities, then there is an element that we can claim for tax purposes. So the medical equipment is 100% allowable for tax purposes, even if you incur that expenditure before you start your self-employed activities. So for those of you who are only recently becoming self-employed, if you had to buy a medical bag or a stethoscope or a peak flow meter or whatever prior to qualifying, so if you bought that in April, May or June of this year, and you qualified in August, September, and you're embarking on your new locum activities now, such expenditure falls into this tax year. So I would be claiming 100% of that expenditure on this year's tax return because it relates to being a self-employed GP, relates to being a GP, so it can be claimed against your self-employed activities. Now, this next slide covers other underlying secondary areas of expenditure that you need to bear in mind. Give these areas some thought as you go through your locum engagements, and you are using things like, first example there, your mobile telephone. Now, HMRC appreciate that we live in a digital age and everybody now conducts their lives using their mobile telephones, apps, iPads, tablets, PCs, and computers and so forth. So you need to consider the business use of such equipment, such computer equipment as the mobile telephone, iPads, tablets, PCs, and so forth. Now, it does not need to be 100% business use. So you can have a home computer that is sits in the home and it's available for everybody to use. So if the children are doing their homework on the computer, and then you come along after surgery and you're performing your medical research, compiling your notes, compiling a diary, that computer doesn't need to be 100% for business purposes. You can have a dual purpose in the household. And what you do in that context is you would consider the business usage. So you'd look at the average use of the hours that the computer is used in an average week. Consider how many hours the children use the computer, and then apply your hours as in a medical profession context. So the hours you spend compiling a diary, compiling your notes, doing medical research, and then you can apply that percentage. So for argument's sake, if that works out at 50-50, then theoretically we can claim 50% of the running costs of your tablet, iPad, home computer, printers, ink cartridges, and so forth. If you buy a new computer and you've established that business percentage, then we can claim a capital allowance on such capital expenditure on for things like a new PC or a new tablet, iPad, and so forth. New telephone. If we've established your business percentage of your computer equipment, then we can also apply that business percentage to your monthly mobile contract and your monthly home internet costs. Now, it all depends upon individual circumstances. So if you live in a home where you've got 3 teenage kids, then obviously the business usage of the internet is going to be lower than it would be if you have, say, 2 medical professionals living at home without any children. So you need to apply some common sense, but you guys are best placed to determine what that business percentage will be. So what I would suggest you do is just give that some consideration over the course of an average week or an average month. How many hours a week you use on your home computers, tablets, iPads, and so forth. And also the business percentage of your mobile telephone. How many of your calls relate to being contacted by the engaging practices, or if you are doing medical research using your mobile telephone, compiling a diary, compiling your notes on your iPhones, and so forth. This list is quite a condensed list. Now we do have a bespoke locum GP checklist of records, which is exhaustive and goes through every conceivable area of expenses which can carry some element of business usage. So that's what we're trying to identify. We look at what we can conceivably claim as having an element of business use, and that's the service we will provide to our clients. We want to maximize the tax relief to which you are entitled to. And if we look at your records and we believe there is an area that you've perhaps missed or something that we would want you to consider, we will prompt you and ensure that you do maximize all of the tax relief to which you are entitled to. Because the legislation does allow us to claim a business percentage of anything that you spend which carries a professional use. When I was talking to Serena when we had our run through, we discussed various questions that are posed to me across the years, and areas of expenditure where GPs will prompt me and suggest that they will carry a business use. Now, you need to apply common sense. Now, some things, some areas of expenditure that that have been posed to me, such as, can I claim for a fancy watch? My patients suggest that the watch I use, it's old, it's shabby. I would feel that I'm displaying an image if I was perhaps to go out and buy a new Rolex. Can I claim tax relief on that? The answer is no. You need to be sensible. It needs to carry a legitimate business use. Now, on this list there, it has been posed to me before. There was a particular GP who was very proud of his handwriting and suggested that a fancy fountain pen that he had purchased for not an inconsiderable sum was allowable for tax purposes. Can I claim it? Now, again, we need to apply common sense, so it is only the business percentage of such expenditure. But what I would say to you is that I want you to consider every pound you spend that you consider may carry some element of business usage. You record that in your expenditure logs, you record that in your My Locum Manager logs, and then hand it over to the accountants, and we will have a look and ensure that if we can claim tax relief upon it, believe you me, we will claim a appropriate percentage for you. On the bottom of that list there is technical books and magazines. Yes, so if you are incurring any such expenditure on books and periodicals relating to doing medical research and so forth, I would say they are 100% allowable for tax purposes. At this point, I'd like to mention accountancy costs as well. Now, the costs of engaging an accountant are 100% allowable for tax purposes against your self-employed earnings. So if you do engage an accountant, you will have income tax relief, self-employed national insurance relief. If you are still in the stage in your career that you have a student loan, you'll also get student loan relief on such expenditure for your accountancy expenses. Now, there is something in the accountancy profession called the Accruals Concept. Now, we adopt a policy at BW Medical whereby we operate a fixed fee service and we wouldn't charge you anything up front. So we always perform all of the service, complete the tax return, submit everything to HMRC. It's only when everything is done and dusted and you, as a client of ours, would be wholly delighted with the service, it would only be then that we would raise the accountancy invoice. But there is something in the accountancy profession called the Accruals Concept, which means we can accrue for such a cost against the tax return to which it relates. So for argument's sake, if I was performing an exercise where I was completing a tax return for any one of the audience out there for the current tax year ending 5th of April 2020, you won't be paying that accountancy fee until after the end of the tax year, because it will be after all of the work is done and you are delighted with the service. However, we will be accruing for that accountancy cost on a tax return, so you'll get tax relief in the tax year to which it relates. And also, we've mentioned there on the list, the My Locum Manager subscription. It's money well spent. It's probably the best money you will spend as a locum, certainly if it is all new to you. This sort of platform of software on the My Locum Manager platform will assist you. It's an invaluable assistant in keeping all your records, helping you with all of the pension forms and so forth. So it goes without saying that it's money well spent, and you do get 100% tax relief, national insurance relief, and student loan relief on My Locum Manager subscriptions, as well as all the other professional subscriptions and expenses that we've covered in this webinar. I'd just like to touch upon key dates and deadlines. So for anybody who is required to file a tax return for the current tax year ending 5th of April 2020, the tax liability will not be payable until the 31st of January 2021 on any earnings which lie in the tax year we're currently sitting in. If you have a tax liability which is less than £3,000 on your self-employed earnings, and you have self-employed earnings running concurrently, then there is a mechanism within the self-assessment system whereby you can elect to have that tax liability collected using a restriction in your tax code number rather than having to make a direct payment to HMRC. If you do have self-employed tax liabilities, which are more than £1,000, and you have no facility for this to be collected via the pay-as-you-earn system, i.e. you don't have any salaried earnings, then you may be liable to make additional payments on account. These are based upon the previous year's tax liability. So for argument's sake, if you are self-employed in the current tax year ending 5th of April 2020, and you have a self-employed tax liability of £10,000, that will be payable on 31st of January 2021. It doesn't stop there, because that £10,000 liability will dictate that you will be obliged to make advance payments on account towards corresponding self-employment liabilities for the following year, and they will be based upon 50% of the previous year's liability, producing 2 advance payments on account of £5,000 each, arising on the 31st of January and 31st of July. So to put that into context for you, if you become self-employed today and you commence self-employed earnings between now and the 5th of April 2020, and that produces a tax liability of £10,000, on the 31st of January 2021, you will have £10,000 to pay to HMRC, plus an additional £5,000 as your first instalment advance payment on account towards next year's liability. And then there will be a corresponding second instalment payment on account 6 months later of another £5,000. Then once you're in the cycle, those advance payments on account are accredited to the following year's tax liability. So you are given due credit for those advance payments on account when we come to calculate your tax liabilities for the corresponding year. Now, the underlying theme to all of this is that if you do become self-employed, it is of paramount importance that you set aside sufficient tax savings to meet your future tax liabilities. Now, when we talk about self-assessment tax liabilities, they encompass income tax, national insurance, and student loan repayments if they are applicable to you. So they can be quite chunky. So what you do need is your accountant to perform an exercise for you at the onset to determine the specific percentage you set aside every month of your self-employed earnings. Now, that calculation can be fluid. You're probably best placed to determine what level of earnings you want to achieve. So if you have an idea in your head today that I want to achieve £5,000 worth of self-employed earnings every month, armed with that information, then I will be able to perform a specific calculation tailored to your particular circumstances as to the specific percentage you would set aside to meet your future tax liabilities. And then if your circumstances were to change at any given time in future, so for argument's sake, if you decide to ramp it up across Christmas and you want to earn £6,000, £7,000 a month, then I can revisit those calculations for you. Conversely, if you decide to take a sabbatical, or you are happy with a reduced level of earnings for a few months, if you want to maybe spend some more time with the family and so forth, then again, those calculations are fluid and can be revisited at any time. But it is important to ensure that they are tailored to your specific requirements and you do stick to that tax saving set aside every month, because it can creep up, and that tax liability on that A day of 31st of January 2021 can be chunky if your earnings levels are high. So it is vital that you set aside those earnings, those savings. Okay. We've touched upon a list of good versus bad expenses choices. I think we've kind of covered.
Yeah, kind of covered it. And I think
what I would say is you need to apply common sense, but anything that you deem may carry some element of business use, then keep a record of it and keep that in your expenses checklists and your My Locum Manager platform log, and then we can decide at the end of the tax year what business percentage we're going to apply against such expenses.
Thanks for that, David. So, David, are you ready for your quick fire question round? Because we've got enough to get through.
Absolutely.
So we'll try and do it. We'll try and do it as fast as possible. Okay, I'm going to kick off with the questions that came at the beginning. So, NK, David, can you advise on benefit in kind?
Benefits in kind. Mm-hmm. Yes. So if you're on a salary, benefits in kind apply to somebody in a salaried appointment. So if you, by virtue of being in that salaried post, if you are bestowed upon you some benefits such as a company car or private health insurance, then your employer will be required to record those benefits in kind, declare them to HMRC on your behalf, and then they present you with an end-of-year certificate along with your annual form P60, which denotes your taxable pay and the tax paid at source. They will give you a form P11D, which is a certificate, a return of taxable benefits in kind. So it applies to the medical profession in a salaried context, not the self-employed.
So would they speak to their practice manager about that, or their accountant?
Yes, so it's the employer that would administer a benefits in kind certificate, the P11D annual return. So they would need to speak to their employer in the first instance, but if they have any questions or any concerns of that area, then they can bounce it off me, and I'll be happy to speak to them or their accountant to get to the bottom of it for them. But it relates to being in a salaried role, not a self-employed role. Okay.
And then David and Daljet are asking if they've got expense claims under the 2.5k threshold, is it okay for them just to do their own tax return online using the government gateway?
Yeah, no, if you're already enrolled for self-assessment and you do tax returns via your own government gateway and your expenses are below £2,500 and you are happy to continue that, then there's no reason why you would I would suggest otherwise. The only thing I would ask you to consider is if you are a full-time self-employed locum, then you would I would suggest that your expenses may amount to more than £2,500. So I would suggest you contact a specialist medical accountant just to review your expenses to make sure you're maximising all the tax relief to which you are entitled to. But in that, anybody doing, sorry,
I was just going to say, accountants are tax. The accountancy fees are completely tax deductible, so it's an added benefit of using an accountant, I think.
Absolutely, it's common sense because. You need, and as I mentioned before, it is these expenses claims add up, and we're talking chunky figures when it comes to tax relief. And my opinion is you should always engage a specialist to do it. Now, you get what you pay for. Now, if I had a shoulder problem and I would need to see a shoulder specialist because it's a complex area, I wouldn't go and see me podiatrist or somebody who I go to see an ingrown toenail. I would engage a specialist to do the exercise for me. Somebody who understands what they're talking about, because there is a lot of tax relief at source here for people who are self-employed. It's a huge spectrum of expenses which can be claimed, and the figures are chunky. So my advice is you should engage a specialist to perform the exercise for you. It's good housekeeping. You get tax relief on the expenditure that you pay the accountant. So in every instance, unless your affairs are extremely straightforward, but even in that, guys, I would suggest you obtain a second opinion to make sure that you are maximising all the tax relief to which you are entitled to in relation to expenses.
Thank you. And then Sana and Natasha are asking essentially a similar kind of question. So Natasha's asking, as a limited company, can I claim for subsistence? And Sana's asking, my accountant told me that you get about £10 daily subsistence allowance. Maybe that's a daily locum work allowance rather than travel. Could you expand on that for me, please?
Yes. So now a limited company carries the stringent legislation associated with running a limited company, and it does have slightly different rules. There are levels of subsistence that can be claimed, but again, a limited company expenditure, it all hinges on business percentages. So you need to prove that it is a legitimate business expense. There are the revenue do publish subsistence guidelines, but it is a case-by-case basis, and you need to ensure that you refer to your accountant to make sure that you aren't overclaiming, because if it is challenged by HMRC and they look at your in depth at your self-assessment tax return and the claims that you're making, and you have overclaimed for things like subsistence and you're trying to claim for fancy meals and cost of coffees and so forth, it can open up a can of worms. And if HMRC suspect that you are overclaiming deemed business expenses, then they can look at more in depth at what you are trying to claim, and it can open up, as I mentioned, a can of worms. And you need to be careful. It needs to be looked at on a case by case basis. As a locum GP, as a self-employed locum, yes, there are specific circumstances where you can theoretically claim some sort of subsistence in specific circumstances if it is a requirement of locum engagement. In that context, it may well be that you can approach the engaging practice to reimburse you for travelling expenses, subsistence expenses, and if that in that context, if those expenses are reimbursed to you, they aren't allowable for tax purposes, but they're not taxable either. So if a practice reimburses you, say, £25 in a day for travelling expenses and subsistence, then that £25 won't form part of your taxable income, but you can't claim that extra £25 as an allowable expense. So it's a case-by-case basis, but yes, there is some spectrum for claiming subsistence, but it needs to be looked at on an individual basis.
Okay, and Eniola's saying, does this mean not to claim for things like indemnity or professional courses if my employer was paying for this? I think essentially she's saying if she's a salaried GP but also doing locum on top, but her practice is paid for her indemnity, then she can't then claim that, can she?
You can. Yeah. No. So if your practice is paying that for you on your behalf, it is an allowable expense from their perspective, not yours. So you're not funding the cost of that expense, so you can't personally claim tax relief on that expenditure, on that indemnity insurance, or any other professional subscriptions which your practice is paying on your behalf. They are entitled to the tax relief, not you.
Okay, so Kirsten is asking, is it better to claim tax relief via business mileage for courses, or add the travel cost to the claim for the course fee?
It's immaterial, because if you're entitled to claim 45 pence a business mile. Now, if you want to add that to the invoice that you're levying to the locum, to the engaging practice, and they're willing to reimburse it for you, then that's where the story ends. That element of reimbursed expenses won't form part and parcel of your taxable income, so you don't pay tax on that element of reimbursed expenditure. But in the same vein, you can't then claim that mileage as a business expense because it has been reimbursed to you.
Okay, and NK is saying, NK and Natasha, actually both of them have got similar questions about childcare or school fees. So NK is saying, can a limited liability company pay a child's school fees, noting that the employee, the locum, is liable for B1K using the P1D form?
Benefit in kind using P11D form.
Okay.
It isn't a tax efficient way of doing. It does happen. It's not something I would recommend, because if you have school fees, let's say they are £10,000, the limited company has to fund that £10,000. So that it's being paid out. So it's costing you £10,000 through your limited company. Now that £10,000 which your limited company is paying upon your behalf, then forms part and parcel of your taxable income. So you then pay tax again as a benefit in kind. There's a national insurance charge as well on the limited company as your employer. So it isn't a tax efficient way of doing doing it. So there's with school fees, they aren't allowable for tax purposes because they're not a legitimate business expense. It isn't a legitimate 100% business necessity to send your kids to a private school. So you can't claim it against your locum earnings, whether you're channeling them through a limited company or through a sole trader self-employed route.
So David, we're actually doing a childcare based webinar soon, aren't we? So maybe we can cover what are the alternatives to do that in that upcoming webinar. Okay, so I'm going to kind of go through these in bullet fashion now so we can get through them. So Preeti asked, I think we covered this, about claiming travel costs such as underground bus fare to locum sessions, even if they're regular locum sessions, and we agreed that yes, they can do that. Anne said, what form of retrospective claim, what form did you use to do a retrospective claim? For travel and driving to locums, is it the return?
There is, yeah. So the HMRC on their gov.uk website have there are different methods of entering a claim for retrospective tax relief. You can do that over the telephone. You can ring HMRC, explain that you want to revisit the previous 4 tax years. All of your expenses are below £2,500 in all tax years concerned, and they relate to professional subscriptions and so forth. There is a form which HMRC do publish, which off the top of my head is a form P87, which is a return of expenses in that context. You can download that from the HMRC website, and you can fill that out with your professional expenses and your travel costs and submit that to HMRC for them to consider a claim for the previous years. And it will be a separate form for any of the tax years concerned. So theoretically, up to 4 separate forms P87.
Okay, and then the next set of questions I'm going to group into one set. So essentially the questions were, can we claim for diplomas, for example, an infectious disease diploma? So David asked that. Someone said, what about humanitarian courses? And I think the answer was, if they're relatable to GP work in any way, then yes, you can, or you can ask for a proportion of a claim of those courses. Is that right?
Yes, if it leads to a new qualification, there is an element that needs to be disallowed. However, on the other hand, there is always an element of that can be claimed in a business percentage, because they are all an enhancement of an underlying skill. So in my view, if anybody has such expenditure that they have incurred and they are encountering any difficulties in claiming tax relief, use a specialist to do it for you. Don't attempt it yourselves, because these areas of expenditure are quite chunky. They are big. The big sums we're talking about, the tax relief at stake, are large sums. Use a specialist to do it for you. But in every context, I would suggest there is always a business element to claim.
And for the electronic side, we covered this. You can claim for headphones or wireless headphones or earpods if you're using them for telephone triage and things like that.
Absolutely. Okay. You establish the business use of all associated computer, mobile, telephone, iPads, tablets, and so forth, and anything associated with that, such as headphones, they still carry the same business percentage. So yes, you can claim a proportion.
Mm-hmm. And then can we claim, this is from Georgina, can we claim mileage if we do locum work in health board run 2C practices? And if so, how?
Yes, it's academic where you're performing the locums. It's a locum engagement. From your perspective, you can claim the 45 pence a business mile. If you're self-employed, then you can apply the measure both methods of claim to establish what's most beneficial for your specific circumstances. But it's immaterial as to where you're performing the locums. At the end of the day, it is a locum engagement. It's deemed to be a business journey, so you can claim the business mileage, either 45 pence a business mile or the business percentage of the running cost of your car.
Okay, and Manoir is asking, the mileage log, can it just be like the electronic log? Do they need some kind of paper trail as well?
No, because every pound you spend on the car is all substantiated by your online banking or your credit card statements, bank statements. The My Locum Manager online platform log that it compiles for your mileage will record all your business miles, and that is perfectly sufficient in this context for forming the basis of a claim on your tax return. It would never be challenged by HMRC. If ever HMRC chose a specific individual to scrutinise the tax return, as long as the expenditure can be substantiated by one form or another through online banking or bank statements or credit card statements, then that's where the story ends.
Okay, and then Rohit's asking, as a locum, is car service or MOT claimable as a tax expense? And we covered that, yes, it is. A proportion of that is related to the business.
Yes, if you're adopting the actual more in-depth method of claiming a percentage of the running costs of the car in question, it is all the costs that you would incur in a year, including MOT and repairs and servicing.
Okay, great. And what about claiming? So Priya's asking, oh, sorry, Natasha's asking, can we claim mileage for our annual appraisal meeting?
Absolutely, yes.
Yeah, great. Priya's asking, as a locum, can you claim for parking if it's paid? Yes, you can, because I've done that.
Absolutely, it's part and parcel. It's part and parcel of the running costs of the car if you are adopting the in-depth actual method of claiming your car expenses. In the other context, if you're claiming 45 pence a business mile, that is about all running costs of the car.
Okay, and just in the last few minutes, David, before we finish, the other David is asking, do I submit a locum form A for all locum work, or can I pick and choose? You can pick and choose as long as you haven't charged the practice for their contribution to it, so you don't have to pension all your income. Jamie's asking, if you are not paying
just on that point, pensioning earnings, if you are a salaried GP as well, so if you're a type 2 practitioner, there will be a requirement to complete an annual type 2 form, which is the reconciliation. Upon that reconciliation form, you need to record all pensionable earnings from all sources. So you need to get that differentiation. You need to differentiate between what you're not pensioning. So as Serena alluded to, you need to make sure you stipulate to the engaging practices, if you aren't pensioning any locum earnings, that they don't pay you the employer's proportion. Because if you're not pensioning the earnings, you need to refund that to the engaging practice.
Jamie's asking, if you're not paying pension but working as a long-term locum, is it legitimate to claim mileage to and from work every day?
Absolutely.
Absolutely. In that same vein, Preeti's saying, if she gets a lift to work because her car's broken down or something, can she still claim for that mileage of travel to work?
Yes. So if you're talking a claim from, if it's a lift from a spouse or a family member, or if it's a car share and you're contributing to the costs, then yes, I would suggest that because that isn't going to be a long-term arrangement, so that wouldn't be challenged by HMRC. So in that context, I would entertain a claim for tax relief on that mileage as well. You bring that mileage.
And just coming back to the travel portion, Baldip's asking, if you're travelling on the tube, do they need to attach a receipt of every single tube transaction onto My Locum Manager, or can they just like tot it up a monthly thing and then just claim that?
They can, so that's whatever your convenience. If you find it easier to record your records by scanning every receipt, you can record it through My Locum Manager, or conversely, you can just tot it up through using the My Locum Manager platform and keep the records that way. HMRC, it's highly unlikely they would ever stipulate that they wanted to see physical receipts for tube travel. So it wouldn't be necessary to physically record every receipt, but as long as you can substantiate and prove that you were performing those locum engagements at those practices concerned, and it was tube travel for those particular days, then that would be sufficient.
Okay, and then just to summarise all the motor claim questions into one, because I know we're short of time now. So just to summarise, if somebody's doing the capital allowance method, they can expense the purchase price of the vehicle, whether it's a hire purchase or however they've paid for it, but essentially just let your accountant know and they will work out whether it's the mileage option or the capital allowance option that's the best.
Absolutely, yeah. You give your accountant all of the information. So if you're considering buying a new car, you get your accountant involved, ask their opinion. So if you're going down the garage and they're offering you an HP option and it suits your circumstances, then yes, if you're buying that car, then the business percentage that we're identifying using your My Locum Manager mileage log applied to the overall miles performed in the vehicle concerned in a tax year, that equates to the business percentage of the running cost of that car concerned. So if you are buying a new car in the tax year, we apply that same business percentage to the cost of the vehicle, and its CO2 emissions figure will determine the annual capital allowances percentage we claim, and then we deduct that. We deduct from that annual allowance the private element just to leave the business percentage that we claim.
Okay, great. And then Para's asking, does the mileage rate of 45p reduce beyond a certain number of business miles?
Yes, if you incur 10,000 business miles in any tax year, the 45 pence per business mile rate then drops down to 25 pence per business mile.
Okay, great. And then Jamie had a question. Is there a point at which the HMRC no longer consider you as locum, but more of a salary GP if you work in one place doing a regular session every week for a year? Do the HMR still see you as a locum for purposes of claiming expenses?
Now, this is we're getting into the territory of the IR35 intermediate legislation. Now, the responsibility of testing somebody's self-employed status lies with the engaging practice, not the GP locum individual. So the engaging practice, whenever they engage a locum, they are required to utilise the HMRC's online tool to test the self-employed status. This is a complex area, and it's a one which I do have expertise in, and I enjoy discussing this. If anybody has any queries whatsoever on their self-employed status, if it is ever challenged by anybody, please contact me, and I will give you the expert advice that you require. But in a nutshell, it is when you are a self-employed locum GP, academic as well, it's a long-term locum. But what I would say, to preserve your own self-employed status, always be available to perform locums elsewhere. It always is good housekeeping on a locum form A and B, monthly locum form B, to have more than one locum engagement, it's separate practice on that locum form B. It isn't essential, but if you get the realms of 6 months and you've got the same locum for the same engaging practice on 6 months worth of locum forms B, then you need to consider your status. Perhaps take a 2-week break, or just perform a sporadic locum elsewhere.
Okay, thank you. And last couple of questions. Someone's asking about nanny expenses, but I guess they'll come under personal expenses, so they wouldn't be claimable. There's some questions about private pensions, and we did do a webinar about this a while ago, but you can look at addressing private pensions and things like that for a different webinar, because it's not really, I don't know, does that fit with anything to do with expenses, David? I don't know.
Yeah, so private pension contributions are allowable for tax purposes. So you get tax relief at source. The pension contributions are deemed to be paid net of basic rate tax. So if you go out and get a private pension, you will get some tax relief. However, you always need to apply this question to the medical profession. When you are members, or if you have the opportunity to be a member of the NHS pension scheme, why do you need a private pension? the NHS pension scheme, despite all of the adverse publicity in the media, is still the best pension scheme in the country. Now, what you should always do in every single instance, if you are considering dropping out of the NHS pension scheme, not being a member of the NHS pension scheme, and going down a different route and using a private pension, you should get specialist regulated financial advice to make sure that that suits your particular circumstances. The NHS pension scheme is the best pension scheme in the country by far. And I'm proud to be a member of the NHS pension scheme.
Great. Well, thank you, everyone. I hope that was really useful, and I hope you've kind of added a few expenses to your list that you weren't claiming before, and you feel a bit more confident about kind of collating a more comprehensive list for the subsequent tax year, or claiming for the last 4 years or so if you've missed out on anything. You've all been great and entertaining as ever, so thank you for that. And David, thank you for your contribution as well.
You're more than welcome. It's a pleasure.
Testify, I have not bribed you or paid you to endorse Milo. You just know a lot of GPs that love it and use it, and you're a fan because it takes your headache out as well.
I am a huge fan of my Locum Manager, and sitting at my
£10 tax deductible bribe later.
Absolutely, and sitting at my desk at BW Palace, it makes my life easier when my locum clients use my Locum Manager. It is the best product out there by a country mile.
Oh, thank you. That means a lot.
Well worth the money that it costs them. It's allowable for tax purposes, and it is the best expenditure you'll have in a tax year.
Just to finish up then, Emma McCartney, you asked about raising invoices. Matt will email you and talk you through how to do all that and get you set up. Our next webinar next month is actually about appraisals for locums, and it's a really good one with a lovely Fazana, so do join us for that. And David, we're going to do one about childcare, maternity leave, paternity leave, and things locums need to think about. So we'll share a date as soon as we've got that sorted. But David, thank you so much. As usual, you've been a star. I really appreciate your time in helping our members get their accounts in order. And everyone, David's email address is on there, so do contact him if you need any other advice. He deals with a lot of practices and a lot of GPs and is hugely knowledgeable. So I'm sure he can help you out. So thank you and good night.
Bye.
Bye. Good night. Thank you.